Big down day in the market. Is now the time to start shorting? Hello, everyone. Welcome to Crossover to Profits. And so another big down day for the market. Pull over what we see on the Finviz dashboard. You can see all the major indices were down. The small caps were especially hit, down over 3.5%. You can see the heat map. Basically, every sector was down except consumer discretionary was up slightly, and real estate was basically flat. But a lot of bearishness coming into the market. You can see NASDAQ now enters correction territory. So a lot of pessimism. And the question is going to be now is what do we do? Do we hold cash? Do we continue to enter favorable setups, or do we start shorting the market? So I'm going to walk through my process and how to analyze, how to approach this situation. So I really look at it the same as I do in any condition, as I start with the major sectors. And so today is now red across the board for both small caps and large caps. So small caps have been holding on, but they lost the 5 EMA today with a massive down day. You can see on the weekly now we've got big volume that's negative. We've lost the 5 EMA positive slope. MACD is now curling down. It's still above zero, but falling. You can see on the daily a lot of volatility, and then basically it fell off today, major gap down, and basically held flat. So at this point, this tells me, hey, it's no individual stocks for buy entries anymore. And so that's my assessment. And what I will do is then I start looking at ETFs. And if you're in a trade in a Roth IRA like I do for your retirement account, you can't short individual securities. So then you've got to look at either hold it in cash, or you could look at some inverse ETFs. So right now we still have some sectors that are holding up pretty nicely. XLP, this is something I called out yesterday. You can see I got a position established today. It didn't quite hit my price target, but still up slightly, especially on such a down day. So this was good. A lot of bullish momentum. A lot of volatility, but still a favorable setup. So what I'll do is if the market sectors, IWB and IWM, are telling me no entries, I won't look at individual securities, but I will still look at ETFs. So if there's certain sectors that are still in play, if these come through on my scanner, so XLV, XLRE, and XLU, so the utilities, are all still showing positive momentum. So if these were ever to come through on my scanner, I would still open a position on them, or if there's some other thematic ETF that comes through. So let me pull over the ETF scan. So XLP showed up again today. So if you didn't get in yesterday, I think today would be another good signal. You can see we've got weekly, just pretty much vertical for the better part of 9 months. Got some nice bullish volume. We got the MACD that's rising and positive. Daily chart broke out to new highs and still held that even with all the volatility and the negative momentum of the market. So a defensive play for sure. So I think this is probably your only setup that really makes sense. I did call out IRT yesterday, and I was able to get a position filled and actually hit my first price target. So this was a good call, especially on a really bearish day. And that goes along with the real estate looking positive. So this can all change pretty quickly. But right now I'm going to hold cash, especially since I already have my XLP position built out. So what do you do as far as looking at some inverse ETFs? So this is if it continues to be bearish and we start seeing some of these inverse ETFs show up on scanners, this is how I would get some short exposure to the market. But right now, let's just pull up the Qs, inverse Qs, and you can see we've got a lot of work to do before I consider this a buy opportunity. I mean, it's as the market's gone up, this is going to go in reverse, and you can see that we've just now got the 5 EMA above the 20 and the 60, but the 20 period is still below the 60, and we still have this 240 EMA as overhead resistance above all of that. So there's just nothing to signal that now's the time to enter the short side. This could just be a bounce, and then we continue to rip higher, or it can consolidate sideways. I would be shocked if it just went straight vertical. And if it does, we'll catch it when it does consolidate once it's reestablished its EMAs. So we can look at the inverse of the IWM, SRTY. Similar story, where you can see this is at the end of 23. There was some buying that you could have gone into where basically all 2023 the small caps sold off. So there was a time to enter the short side. But since the November of 23, small caps have been bullish, and we continue to see that. So there was a big reversal day today, but still the 5 EMA is still below the 20, which is below the 60, which is below the 240. So just inverse stacked EMAs. This is not a time to go short the Russell 2000. Then look at the S&P 500. So here is the levered, and then we want to look at the inverse. I believe that's XPXU. So this is going short again. Just not a time to go short the market. So we can pull up the Qs again. So this is the bullish side. Yeah, it's for better part of a year we've been really bullish on the technology, and now on the inverse side we've got some momentum, but still a long ways to go where this is really a buy entry. So it's a pretty short video for you today. Again, it's a cash market right now. I would say the only entry I would consider would be XLP. Again, what I look at here is consolidations, bullish price action, stacked EMAs, and those are my conditions to enter. I can pull up what came through on the stock scanner, just in case you're curious. Let it load for a second. Here it comes through. So you can see IRT showed up again. So this is a position I called out yesterday, and I actually got in and hit my first price target. And it's very defensive. We got real estate, some healthcares, industrial materials, and then next, which continues to look really favorable. But this is where you got to have some rules. Even though this is a good looking setup, energy is, I'm considering, not in play. So you can't look to enter positions like this, even if they do look favorable, because then you're always going to be chasing, and you're never going to have a time where you're sitting on your hands and just in cash, especially right now where there's just uncertainty of where the market could go. So hope you found this helpful. Please consider liking and subscribing. Otherwise, thanks for watching, and God bless.